And good morning. It's time for another Tom and Shane podcast. And joining us this morning, Mike McCormick. Mike is a fiduciary. That means he's a financial advisor and he has to do good stuff for you or he'll lose his license. So, Mike, welcome. Glad to have you here.
Hey, it's wonderful to be here, Tom. Thanks so much for having me, Shane. Wonderful to see you again. Excited for today's show. As you said, Tom, I'm a fiduciary. I'm also a registered investment advisor in the state of Montana. And if you're not one of my clients, what I say on this show is not my fault.
That's right. Absolutely isn't your fault, and we will swear to that in court.
We just like to get that out of the way.
Yeah. You're a dad, a couple of daughters out there, so they're doing well, I hope. And Shane in Kamloops, Canada, our international show. Yeah, happy to have you guys here. And today we want to talk about how to keep your money safe. How to keep your money safe. And before I turn it over to you guys, I want to throw out some numbers before we start. So let me do that real quick, and we'll kind of start there. By almost any mute your thing, Mike. Sorry. By almost any measure, 2021 was a successful year. Every economic measure pretty much was positive, but we just passed 30 trillion in debt. 30 trillion bucks in debt. Now, we have three mandatory things we have to pay. We have to pay Medicare, that's 1.2 trillion. We have to pay Social Security, that's 1.1 trillion. And we have to pay the interest on the debt. And the interest on $30 trillion is $424 billion. So
right now,
as of today, we have a gross domestic product of 23 trillion. 400,000 or 400 billion. So we can pay the interest on the debt, still have 23 trillion left over. We can pay the Medicare and Social Security. We'll still have 21 trillion left over. And a trillion, of course, is 1,000 billions. So I think we're in pretty good shape. Now, the other thing that pundits always put out is the debt per citizen. That's $90,227. What they don't tell you and what they always leave out is the savings per family. $18,038 is the savings per family in the United States. And they also never mention the assets per citizen. Every man, woman, and child in the United States has assets they could turn into cash, and that amount is $603,000. So if you're looking at $603,000, $18,000 in savings, a $90,000 debt doesn't look all that bad. We've got our official unemployment or actual unemployment's 11 million. Official is 6. We got 130 million full-time employers or employees, I guess, and 25 million part-timers. That's a third of the nation is working, guys. So looking at all these positive things, Mike, what? And then I'll go to Shane with the same question. Everything looks rosy. What's the problem?
Well, wonderful synopsis, Tom. I like the numbers. I love how you frame that in an individual context that everybody can understand in a meaningful way. Those big numbers are super big. And a point earlier, I was muted that entire time, Tom. So if you hear feedback, I don't think it's coming from me when I'm doing my best. No, I understand. And you're right. I am on just on a computer, so I'm a likely candidate for that. I think things are glass half full, and that's really what I heard from you. I heard that we're in a situation where we're in a strong economy, we're in low unemployment. We do have rising asset prices. You shoveled that one underneath the desk a little bit. And the way you opened up with the show, which is where's safety? Where can I find safety? Those two are the blind spots in this scenario. because when you're in a high inflationary environment, which we are now, and I think in some degree we're just catching up for inflation that hasn't happened also. When we come back, we're going to overcorrect. The market always overcorrects to the upside or the downside. Doesn't matter which metric. We're going to have a bounce back down to some level that'll look like a trend line that 3% inflation is where we used to be. And for some reason, people were getting comfortable with the idea of 2 or even 1. And that just wasn't realistic. And so now trying to protect your money and keep it safe is even trickier because you have to take risk. When interest rates go up, when inflation is high, you can't afford the savings. The savings, 0% in a CD, yeah, you need to have a portion of your assets that is that bond proof. But you can't have a significant portion of your money not earning anything when the default risk-free rate is more than 0. That's the short story, is that I'm a big believer in the glass half full numbers. I'm a big believer that the U.S. still has more credit to go. I do have concerns, but it's not those.
Okay. Shane, what are your thoughts?
Well, first of all, I want to point out that it's nice to be with those two of you once again, and I'm very grateful for that. I always look at everything optimistically. Numbers don't lie to me, so I pay attention to them. We're heading for a train wreck. I don't know if it's going to cause a lot of death as an analogy, so it ends up being a recession. Could be a major train wreck, which would turn into a depression. Globally, that would be set off by war in Asia, with China doing something with Taiwan, or Russia doing something with Ukraine, or even with NATO. That'll strike oil to clearly over $100, probably as high as 150 until it's resolved somehow politically. The other numbers that I'm looking at is right now globally, you have 2 great countries, Brazil. They're paying 11% for people to buy their debt. In India, excuse me, it's 7%. Mexico is 7.5%. It's not cheap to find people that'll buy your debt, and it doesn't matter anymore about whether or not the U.S. can fund its debt. At $30 trillion, as Thomas pointed out, isn't relative, so you have to look at the numbers. So let's do that real quick because I get a chance to rant. So QSIP numbers, Treasury auction results from the Treasury Department, 91-day bill on the 31st of January. They put out for competitive bid $59.1 billion, and of that, 22 billion was taken down. So, it's looking real bad as far as where the issue of indirect bidders is, which is foreigners. They control, as you know, about $7 trillion worth of your debt. At one time it was China, but December 2019, they sold 300 billion. I wonder why. Anyway, Japan owns your country with $1.1 trillion, as the politicians would say. Now, I've been talking about this since the 1st of May as a concern. Let's look at the 30-year note or the 10-year note. 37 billion was offered on February 2nd, and 12.9 was taken. Institutional abandonment is apparent. The 30-year bond on February 2nd, 23 billion, and a whopping 8 billion was taken down. So it's Morgan Stanley is looking at saying that there could be as many as 7 rates to as high as 2%. Most people on the street are now saying that the Fed will raise maybe 3 times to 0.75 to 1%. I mean, that kind of jump is supposedly the cover is inflation. Not true. Inflation is predicated on this the supply chain and Americans not wanting to go back to work or need to because of the money they save. Americans are very frugal. My position is that the Fed's going to raise these rates this year to get people to buy your debt, and hope that foreigners maintain it and don't drop that 7 trillion that they're holding. So the specifics of all of this can I guess be dealt with by looking at the market overall. And right now, when you're looking at individual stocks, or you look at any any of the stocks that I certainly watch. And yeah, as you know, Tom, I watch all of them. So I mean, I try and do the best I can with that. And you know, Facebook 241. What'd you sell it at, Tom?
Well, 320.
Well, there you
Well,
go, buddy.
higher than that. I sold a little
Yeah,
higher
higher than that.
Yeah.
So I mean, it's
Yeah.
down 23%. Starbucks down to from 125 to 95. PayPal is a wipeout. You know, it's down from 280 to 136. I could go on. It's endless. Facebook is the single biggest rotter in the room
Yeah.
that everybody should
Yeah,
really
they've
be
taken
worried about.
they've taken a
They-
bath today.
They've taken it back because they're not meeting their numbers. But even worse than that, you know, um, they're just not showing any ability to bounce back. So there you go. And I'll get back to the general market when I get Mike in. Okay.
Yeah, let's get Mike back in here. Well, Mike, you know, some of the things Shane points out, I don't hear any of the politicians worrying about selling the debt. I don't hear anybody. I don't even hear the pundits on the business channels talking about that. So what do you think about that? So much debt is offered for sale and not much is taken.
Well, what I see, Shane is right in the world that he examines in that regard, and that level of complexity and high and directness. What I watch is what happens inside of people's 401ks. And what's happening inside of 401ks right now is that diversity is helping out. You know, these days, diversification means more than owning an S&P 500, more than tech stocks. In terms of interest rates and moves, there's been some advanced moves out there that have done some significant damage in some areas. And we're seeing a big sell-off in Facebook right now, as you guys pointed out, that's really worth talking about. Almost 25% down off of poor numbers. They're having problems with Apple's privacy situation that I was looking at. But just to finish up my backup thoughts about, you know, what individual investors are experiencing right now, they're experiencing a Dow that has rolled their earnings, their portfolio, or excuse me, the S&P, where they're basically back to September of last year. If they were to pull out a statement from their portfolio of September of last year and see where they are today, it's essentially a full stop, round the horn, up for Christmas Santa Claus rally, and then of course straight down for January and the beginning of February right now too, with this volatility that we're having. I think it's transitory. I think it's short-lived. I think that this is going to be something where to get out now, you're going to miss the opportunity to get back in at the right time. Facebook, I think, is a great example to watch because I expect people to be backing up the truck right now if they can buy Facebook at these prices.
Yeah, I would agree with.
Facebook
I would agree with
like that.
Yeah, I would agree with that. In fact, even as recently as 2 to 3 months ago, I think Facebook was rated a buy, and as far as I know, it still is. So that may be an opportunity for some people at you know, looking at Facebook. They're not going away, so this is probably an opportunity for a lot of people to pick up some of that stock.
They got a PE ratio of 17.30, and here's an example. So you know, Google declared earnings. Facebook declared earnings. Google's earnings knocked it out of the park. Facebook's earnings did not. That was kind of a tricky one to see.
Yeah,
they're both advertising companies when you get down to it, right? The social media context, advertising revenue, eyeballs. The search, advertising revenue, eyeballs. Google executed a hell of a lot better, that's for sure.
Okay, so there's only one stock for anyone to buy, and Tom, I hope you're listening. You know, we made the call here. We have for over a year and a half. Google, with only 300 million shares out, would split its stock, and I actually did say it would be 10 to 20 times because of the other players on the street, and of course they announced that this week. So you know that's going to put 6 billion shares out on the market, around 150. I hope you buy some, Tom, all the way to 200. That's the stock that's going to take you somewhere over the next 10 years. It's great management, huge cash flow. They know how to manage assets that they acquire, like Berkshire Hathaway, and it has the potential to ride right back to where it is now, $2,000 to $3,000, even with 6 billion shares out. So I hope your 401s look great, Mike. They'd even have looked better if you'd listened to us in the last 6 months, because we told everyone to sell, and you'd be in cash and you would be backing up your truck because you love Facebook, which is a dead dog. Facebook's got too many competitors. They're going to grow. TikTok has expanded faster than Facebook has, if you look at its, its history. And so there's competition out there for Facebook that, look, 7.8 trillion people in the 7.8 billion people in the world. Just over 3 billion have access to a phone or a computer. Yeah, Facebook has people have maybe use it or check it out. Doesn't necessarily mean they're on, because their numbers showing they're not. They're falling off. Well, the other competitors, to them are growing. Finally, and the most important thing I would say is that oil is a play still. It's still the universe. Natural gas is the universe. Also been calling this for the last 6 months. And as I said, 100 to 150 gas or oil, and even $5 to $6 gas is in the foreseeable future. What's going on with the policies and decisions the U.S. administration is taking. So
I'll stick up for Facebook here. I'm going to stick up for Facebook here, Shane.
Oh, good.
The average time a U.S. citizen spends on social media, over 18, I'm guessing, 2 hours, 25 minutes a day.
Right.
When you look into where people are spending their time, when you look into where people are spending their time having their beliefs and values reinforced, challenged, modified, however you want to read it, you've got a situation where you've got an audience that is engaged, targeted, with personal information that no amount of laws is going to be able to roll back the advantage that Instagram, Facebook, and friends all have. YouTube certainly really is what's driving Google's situation, and that is social media. And they are a big player along with TikTok as well. But we're looking at a paradigm shift. And when you think about the metaverse, and I'm thinking about it in the futuristic sense, right? This idea that there is an alternate reality out there. And when you know somebody that games and is into this sort of thing, and when you see the numbers that companies like Microsoft are looking at as a potential for this when they acquired Activision, you're seeing a future where it's not very sexy. It's not. But we've got
that's just not true. That's just not true. No, Mike, what you're saying is not true.
Oh, I love it.
Facebook has 2.9.
Taking the old guy.
Hang on. Don't talk over each other. Okay.
All right.
Go ahead, Shane.
But look, Facebook has 2.9 billion users around the world. Great. And their numbers are down significantly, and they're losing people that are monthly users. But you look on an active daily social media popularity, and the numbers are totally different. And so what you're saying is wrong. Instagram, 1.386 billion active users daily. Facebook Messenger is 1.3, and WeChat 1.2, and TikTok 1 billion. So 1, 2, 3, 4, 5 billion daily users at 2 hours a day, because obviously they're the same people, because this is based upon the popularity. There's way too much competition out there for Facebook. When people find out, you can get put in jail. They can shut you off. They can shut you down. They can abuse you, and they can use your information illegally, legally, whatever country you live in. And they can't get to some countries because of what they do or don't do. I'm sorry. You're looking at it from the wrong angle, and that's time. In 4 or 5 years, a new generation, it'll be WeChat, TikTok, and Instagram. So there you go. Our generation and the millennials grew up with Facebook. They didn't.
Yeah. Well, the Instagram's owned by Facebook, so there we are. So there we go.
I think I'll settle on that.
Yeah. Well, let's. I mean, right now we're live on Facebook, we're live on YouTube, we're live on Twitter, and we're live on LinkedIn. So that alone, just us being on there, should drive those stocks up 5-10 points, I would think.
Well, yeah, there's 2 billion people on YouTube. Yeah.
Yeah. Well, sure. Yeah, and they're all 2 million are watching us right now.
That's
one
right.
thing that I think about a lot is where are my clients getting their information? Where are they? And it makes me realize that there's different populations that gravitate to different areas, right? And there's different reasons why people target different populations. If you're selling pop music, you're not going to be on Facebook. You're going to be on TikTok. And if you're selling estate services, you're probably going to be on Instagram and Facebook. And that's one of those situations where, you're looking for $2 sales or you're looking for $2 million sales. And so, where the assets are is something that's always interesting. Time will tell. Time will tell. I'm not a big fan of Mark Zuckerberg. I mean, I think that I think they've dropped the ball in lots of places and still been able to get the ball back. And I don't think that the chapter's over on it. But there's competition, and that's what makes it great. I always invest with a index, and in this case, the XLC is the perfect index for this because you own both Google and you own Facebook, and you own Verizon and AT&T underneath it. And that means that on a day like today, when Facebook is down, I mean, good Lord, I would not have expected this sort of reaction in an individual stock at this point.
Mhm.
But I was looking at down 25% just a second ago. If you're in it, owning it through an index, you're down 6%. So still 1 day loss. That's pretty significant.
Yeah, right.
And it's going lower. We need to mention
Hang
WhatsApp.
on, hang
If we're
on.
going to talk about.
Let me get our listeners in. Hang
Okay,
on.
just let me finish.
Well,
WhatsApp.
no, I don't want
you
you to finish. I want the listeners on here. Come on, that's why we're here. We're not here
to talk about it. 2 billion users on WhatsApp daily. 73% are on
How many
Android.
Facebook users have gone to Rumble? Bruce wants to know. I guess Tom won't be called for deflated balls. His ego is definitely full of air. There you go. All right. So now, rap, Shane, go for it.
No, I 2 billion WhatsApp or WhatsApp. I mean, that's another example. Rumble is an interesting thing because of the fact that so many people were busted by what Facebook was doing, but it hasn't shown anything particular. It's a direct thing for people to go to 32 million people. And I think most of those people are conservative people because they were so upset with what happened to Trump and how he was treated and so forth.
Yeah. All right. Inflation, Mike.
Yeah, thanks. I put something in my mouth so I don't respond to the questions there. Like interest rates, the Fed's playing it perfectly. They said we're going to raise rates. They haven't done it yet.
They claim they are.
Rates have gone up. If you look at the mid range of the curve, the 10 years up to about 1.8 last I saw it. Doesn't sound like a lot, but when you think about fixed income, I always think about it in terms of percentages, because if you go from a 1.5% 10-year rate to a 1.8% 10-year rate, that's a 10.5% swing in valuation right there. Boom. That's going to adjust a lot of portfolios significantly. The work's already been done. They don't need to do much more than say, we're going to raise rates a quarter coming up in March. They do it. They raise rates a quarter. The market's going to readjust in front of it. And that's some of the repricing that we're seeing. We're seeing people move towards value. We're seeing people try and move money safely. Tom, to your point of the whole show, trying to get some winnings off the table, reduce risk. The challenge is that in an inflationary environment, you have to have risk. You need risk in your portfolio. And so I do expect, whether it's Facebook or whether it is another one of the stocks that are down, what the markets are down 2%. NASDAQ's down 2.5%, S&P's down 1.6%. It's nice to see the different diversification. Just know that you're not going to be able to pick it out. We talk about things that might lead you to believe that some people can pick it. Hedge funds, once again, in 2021, severely underperformed the index. Most all active managers in a mutual fund underperformed the index. And I got to tell you, if I was a stock picker and I didn't know, and I was offered up the opportunity to pick stocks through a pandemic like we're having, I'm feeling like it's over, but different subject. But if I could have been, in a time machine without knowing how the numbers played out, going back to a pandemic, you'd feel very confident making stock picks. You might have lost your shorts.
Amen. Hey, if you're just joining us, why not subscribe? Hey, why would you want to miss any of this kind of conversation? I mean, subscribe, ring the notification bell. You'll always be notified anytime we have a new podcast up, which is every Tuesday and Thursday at 10 o'clock Mountain Time. Like us, leave a comment. Let us know what you think of the show and what we can do for you. Also, we're brought to you by StreamYard. I can use it, so anyone can use it. If I can use it, I'm as dumb as a post, and of course, I'm using it pretty fine, I guess. And if you want to support the show monetarily, Patreon is the way to do it. There's a link in the description below, and we will be happy to advise you, give you help, whatever. And we hope that you will take advantage of that. So, all right. All the commercial crap out of the way, Shane and Tom.
Good. Well, the Fed is irrelevant. It's on the sideline. It's been irrelevant since quantum easing from 2008 to today. They have nothing but debt. They're sitting on $4 trillion U.S. debt, largest contributor to the Treasury because of the interest they get. But they're also sitting on over $3 trillion in mortgage-backed securities that since 2008, they've been buying back debt from the banks that bought it to fund your country, plus mortgage-backed securities. Inside job, boy. In the meantime, the market's moving on this without the Fed. I mean, the 10-year note right now is paying out 1.8%. That's not the Fed. That's the banking industry. For you to go get a commercial loan, 3.5% to 7%, to get any interest from what they're making on 0.25% from the Fed to lend to you is a joke. What you have in the bank is a joke. What you put in your savings is a joke. Our RSPs are a joke. Social Security, they keep telling us, is bankrupt. Well, they're sitting on, $4 trillion or almost $3 trillion in your debt. Oh, a special debt. So it's off the books, but it's still debt. But they got to sell it to convert it to be able to pay out to anyone. So the market's way ahead of the Fed on all of this. And right now you've got a bubble in the bond market, you got a bubble in the real estate market, you got a bubble in the equities market. You even have a bubble in the commodities market. I mean, the market doesn't lie to you. Crude oil is the reason crude oil is trading where it's at is because of demand. It's not speculative. It's the most used commodity in the world. We know that. But natural gas at 485. That should tell you something because it's a miserable winter out there. And when you look at home heating oil at 274, it's up 64% year to date. And natural gas up 65% year to date. And so look, we're looking at indicators right now. And another one that's new, they even have their own lane now. I mean, look at Bitcoin, $68,000 to 36. This is like the Japanese market back in 87 when it was at 35,000 and then dropped to 8. And this like the U.S. market in 08 that dropped to 6. So these are the numbers you're going to have to wonder about and expect. I wouldn't be buying anything. If you've got anything that's in the green, anything, and you still have a profit from what you bought, get rid of at least half of it or get your investment out and go to cash. You're going to have a much better opportunity as this gets worse to buy back in, but not for 3 months, at least another quarter, at least.
All right. We're about finished here. Final thoughts, Mike? Anything you want to pass on?
I don't know where to respond on that, but I'll start at the beginning of Shane's last rant in there. It's all the Fed. The past 10 years has only been the Fed. We've had liquidity pumped into the system through capitalism, and it's worked. And everybody I know is thriving. Everybody I know has plenty of safe money. Everybody I know has performing investment assets that are still for the past, if you go a year ago, January, they're still up in the double digits even now. And we may have continued downside. We have stretched valuations. We have some concerns. The one point I'll give to Shane out there is that one of the big fears that I do look at is geopolitical risk. It's hard not to ignore that right now. But you can't plan that one. That's why we have safe money. If you want to get out and go to cash right now, it's going to feel really good. And listening to fearful stories about the future and then going to cash is a tried and true way to not grow your wealth. The outcomes of investors are studied in this regard and aren't particularly clear. Now, that's professionals and people that have really fantastic discipline, which Shane certainly does, can execute strategies that are unemotional and allow people to get back in, because getting back in when it's at the bottom means that you're going into the darkest, deepest day and you're the only person there buying, and you buy stuff and you say, boy, that felt good.
Yeah.
No, you are just second guessing yourself all the way. So that's the second part of going to cash that most people have a hard time with. But we'll see. And I look forward to seeing how Facebook turns a corner on this one. Boy, I can't underscore that is, of course, I heard the news last night. But when in overnight futures, it's down, it's never that bad during the day. And right now it is.
Yeah.
Well, Facebook might be a buy at 125.
All right. Well, we'll keep an eye on that. Maybe I'll buy it back at 125.
Buy Google. No, Google's the only play in the entire market. No, QQQ is pretty solid. I like that too.
Okay. Well, I'm not going anywhere near TikTok, that commie pinko communist website, social media crap.
You got to be careful investing in.
That takes all your information and uses it against you. I don't think so. I'm not.
At least our country uses it to help extract more of our dollars out of our pocketbook. Something.
Yeah, that's true.
Something honorable like that. Shane, thank you for playing tennis today.
Yeah. All right.
Really
Thank you, Mike McCormick, for being with us. I will put Mike's information down below on all of our sites, all of our live sites that are listening to us today. So if you want to get a hold of Mike and get information, that'll be fine. And Shane, thanks for being here as always. Thanks, Mike. We appreciate you very much being here, taking the time out of your busy day to educate us. And we'll see you again down the road. Obviously, we'll have you back again.
All right.
And that's going to wrap it up for us, guys. So thanks for watching. Don't forget to subscribe, ring the notification bell, like us, leave a comment. We would appreciate it. And we'll see you on our next podcast. Also, don't forget, we're on radio on Saturday, 8 to 11 Mountain Time. All you got to do is go to kmmsam.com, click listen now, and you're on. No signups, nothing needed, nothing like that. So, hey, we are glad you're here. So thanks for listening, and we'll see you next podcast.